Yo, Charge, you running the show tonight, bud?
Oh, what up, MFers?
What up?
What up? What up? I gotta pull up some stuff real quick. So we gotta figure out sharing the screen. I gotta close all my porn real quick. Yeah, y'all are fucked. So this is a trading 101 also. So I see like Xander, you're in here. Charge is in here, obviously. This is definitely going to be more the basic stuff. And so before we start, I want to just sort of see if you guys have any specific questions. My plan for today was to cover the basics as much as we needed to. We can cover like longing and shorting, some of the terminology that we're generally used to covering. And then I was going to show you guys how I personally interpret Thor and sort of how my trading strategy utilizes Thor and ways that you guys can also start looking at it, looking into it, and really see what's going to work for y'all. 1 second. So while I'm pulling up some information, I just want to say, like, JLo, I know that you guys have really been in, and here's Lena. Hello, Lena.
Hey, what's up?
What up? So I was just getting everybody ready to go. You're got a fucking crick in your neck that just won't fucking pop. All right, so we're gonna jump right into it. We're not going to be covering any charts specifically today. We're not going to be covering like any of the trades. That's really what Mode is on board for. And I know that he's left you guys, actively trading. And I want to just do this as a trader 101 for anybody who's either new to Thor or still looking to utilize Thor or just sort of see a different take on it. So I want to start by just asking the question, which is, who here is really going to be like baseline zero knowledge, wants to cover the absolute basics. If you guys want to move on past the basics, we can really jump into Thor, but I want to just have that be an open question for now. And unlike Mode,
love the basics.
All right, let me pull. Entire screen go live. Let's see what we got. All right, looking at all you beautiful frogs in here. Don't look at my screen too hard. Cover some of these things real quick. All right. That up. Not important. All right. Cool. So we're going to start right here. Absolute basics. Feel free, chime in. Let me know if you guys need to ask any questions. Super happy to stop and just go from there. Welcome to my home screen, by the way. This is what I look at for like 12 hours a day. So we're going to start by just talking about different terminology, and we'll really roll from there. So there's two forms of trading that is going to be most commonplace. People refer to spot trading and or perpetuals trading. Spot trading is what I personally really like, and that's what I generally go with as a spot trading account. When you talk about spot trading, you're talking about actually physically buying the actual baseline asset. You are buying Solana, you are buying Bitcoin, you are buying dollar, you are buying euro. You're physically owning that actual asset. A spot contract and spot trading has a lot of value overall. You know, when you buy spot and you purchase the actual asset, there's a wealth of things that you can do with that actual asset. Like Solana, you can stake it, for example. US dollars, you can put it in a savings account, which we all know is shitty returns, but you can let that actual asset go to work for you. You're trading something that is, in our world, like a tangible sort of asset. So when we say spot contract or spot trading, that's what we're actually talking about, is physically purchasing or selling the asset, Bitcoin, Ethereum, whatever it is. Now, Mode has this listed as contract. Usually we refer to them as perpetuals. Perpetuals is a different form of trading that you're trading strictly against the price action of the asset. You don't physically own the asset. You don't physically own anything other than that contract where you're taking a speculative bet or trade that reflects the price action. Contracts and perpetuals are really good value for people, I would say generally more skilled trading, because there's a little bit more complexity that goes into perpetuals trading. You can really easily get wrecked, adding a bunch of leverage or things like that. But perpetuals contracts, I would say, is definitely the second phase of trading. It is what we generally have to work with on chain. Outside of centralized exchanges, you do find, and you do generally find a lot of trading volume on perpetuals contracts. There's platforms such as like Didex and Drift on Solana. Most of the volume on decentralized exchanges are running in perpetuals contracts. When you do trade perpetuals contracts, you'll either do one of two things. You'll go long or you'll go short. When you go long, you're saying, I expect the price to go up from here. When you go short, you're saying, I expect the price to go down from here. And, we can get into the nitty gritty if you want to, but essentially, you profit if you make the correct choice. If price go up and you're in a long, you will actualize gains. If price go down while you're in a short, you'll also actualize gains. Now, here's the one that we're going to cover, and I don't know what Mode really, suggests all the time. And you'll find very quickly that there's a ton of different ways to trade. Everyone has what they consider the secret sauce. And if you're trading constantly, then you'll find your own method and your own strategy that works for you. And for me, that is not using leverage. I am a spot trading maxi. Because I'm so busy, doing cyberfrog stuff and building in the background, I don't have a ton of time to be in riskier trades. And so spot is a really great option for me because I can set it, forget it, and I take the biggest delta trades that we have and I go from there. I hope you guys took that render call, which is currently up like 30% or something like that. That thing was. So leverage is essentially, adding a multiplier to your capital and to the trading price action. When you start talking about leverage, you're essentially using money that you don't actually have. And so, with that being said, if the price goes the right direction for your trade, you will get more of a return using leverage. And the inverse of that is if the price goes the wrong way from your trade, then you're going to be penalized much more heavily, given that you've taken essentially borrowed funds. And so with that in mind, as you guys are really starting to learn how to trade or you're finding the best strategy for yourself, I always encourage, really limiting your use of leverage. The easiest thing and the most common thing that we see is people coming in and saying, hey, oh yeah, okay, you guys are saying Thor fucks and you've got a 70% hit rate. Well, I'm going to degen leverage trade everything. And that's a really easy way to get wrecked if you don't really have that strategy or that risk management in place. And so, this is covering the very absolute basics: spot and perpetuals, and then leverage. You can trade spot with leverage. I personally don't do that because it's just not in my strategy, but you can. They'll offer 3x and 5x leverage. So when the price volatility or the price action moves, you'll have either amplified earnings or amplified losses in that front. Any questions on these just so far? And I'm not looking at chat right now, but I can.
Is spot the easiest for a simpletons?
I would say spot is the safest and it is more simple, yes.
Thank you.
All right. So let's move on. So we talked a little bit about this just super quickly. You don't look at my home screen too much. There might be alpha there. So there's a couple things to know about when we start getting into, what type of position you're taking. When we say long, it applies to both spot and perpetual. I am saying I am spot long on Solana since $8. That means that I physically purchased Solana at $8, and my expectation is price go up. Now with short, long, you're under the assumption that the price will increase. Short is short selling an asset, and that's one of the expectations is the price go down. With perpetuals, you can benefit financially from taking a short at the right time, just like we saw with this recent one-day Solana short that we had that's absolutely doing great. And then I'll start getting into a couple of the other things about what shorting can mean given your trading strategy here in a little. TP simply means take profit. It's closing a portion of your trade for profit. We have 3 recommendations in Thor: TP1, 2, and 3. And once again, you can use take profit recommendations to really find what you'd like to do for your own trades. I'm a big TP1 kind of guy. I like to know that I'm going to get in and then I'm going to get to my take profit level 1, and I'll usually cut a large portion of my personal trades at TP level 1. Do I miss out on some profits? 100%. Do I finalize and do I reach take profit more often than those who shoot for TP2 or TP3? I do. There's also, a strategy where you can sell a percentage of your trade at these different intervals. So TP1, TP2, TP3. Diving into some of the maybe more detailed stuff, I'm a big spot trader. Now, with spot trading, I feel like there's a lot more leeway for price action to go up, down, left, right, and center, and I don't really give a shit. We have a really confident level with Thor, and so I will shoot for TP3 a little bit more often, but I will have cut my take profit trade at 50% at take profit level 1, 25% at take profit 2, and then I'll bag hold generally what is my profit at that point, a percentage of my trade, either waiting for take profit level 3 or simply holding those assets if we don't get to take profit level 3. So, we'll get into that a little bit more, but you can definitely manage your own trading strategy by identifying which take profit level that you're looking to hit and how much of your trade you want to close at those intervals. Like I said, I'm a big take profit level 1 kind of guy, and some of us are take profit 3 or nothing. And so that's your own skill and time in the market that will let you really find what works for you and go from there. When we qualitatively say that Thor has a 70% plus cumulative hit rate, we qualify a trade as a win if we hit at least take profit level 1. And so when we say 70% of our trades hit, they're hitting at least that take profit level 1. So stop loss. Stop loss is another big part, and it's the inverse of what we were just talking about. Take profit, trade goes your right way, you're going to get some money, and you're going to take profit. Stop loss is assuming that the trade doesn't go down or doesn't go the way that you want it to. And you can set up a safety net for your trade in case you're sleeping or you're fucking around or doing whatever, not watching charts, where you can set up the maximum amount of money you're willing to lose on a trade. Now, this is again personal preference, and a lot of it has to come down to what your risk tolerances are. For me, generally, since I'm not using leverage and I'm generally trading spot, I don't really have a stop loss. I'll bag hold my fucking crypto to zero if it comes down to it, because it ain't fucking going to zero. And so when we talk about stop losses, I generally would assume, you're trading perpetuals and you have a slight amount of leverage. When you apply leverage to a perpetual contract, you 100% should include a stop loss in your trading strategy. Otherwise, you can get wrecked really easily. So stop losses can be auto-calculated by Thor, and we'll talk a little bit about the risk to reward, but not too much, just because we want this to be like a 101. And so we're just going to talk really mainly focused on how I personally trade, which is spot trading. So stop losses are good if you want to prevent maximum loss, or like many of us have experienced at some point in time, getting your account liquidated. Liquidations are bad. You will take all of the capital that you have within your trading portfolio and it will be closed out and your whole position will be liquidated. Some of them have different types of perpetual trading where only your trade will get liquidated, but it does depend. So stop loss is a big important part of all of this, and we'll show you a little bit about how you want to use that in the future. All right. So we're going to go into some more of this stuff. DCA. You guys hear it all the time, and it is simply purchasing or selling at an average cost, regardless of like price action or anything. I generally will say I DCA in $100 a week into crypto, and I use Thor signals to do so, but I'm dollar cost averaging because I'm very spot long right now. It's a great time for us to be spot long, and that's what I do is I'll dollar cost average in a little. There's some examples here. You buy SOL at $30, you buy SOL at $20, and you can mitigate some of your losses, or you can average out your entry price by DCA. A lot of us bought SOL at $100. A lot of us bought SOL at $8. And if you can really balance that against one another, a DCA trading strategy is a well-performing strategy and largely has been for a long time. DCA, you're not really concerned about price action too much. You'll simply buy more. When I talk about my own personal trading strategy, we are big DCA spot traders. And so, like just recently, I bought Solana at $18 and I sold at $24. I made $6 per Solana that I purchased, and I was happy with it. Now I'm going to DCA in with my profits as we hit some of these lower calls that we have coming. Risk to reward management is by far one of the most complicated and difficult parts of trading. You have to be your own sort of master of risk management. When you're talking about risk management, you're fighting the hardest person that it is to fight, and that's your damn self. There are so much emotions that come into trading. There are so many things that can influence people when it comes to trading. What's my Twitter saying? Is everyone saying that Solana's going to $5? Well, I bought it at $8. Maybe I should sell right now and, fucking wait to buy at $5. Ignore all of the noise. Use Thor. Ignore the bullshit. When someone tells you Bitcoin's going to $100,000 and it's not, just ignore the emotional catalysts that can really happen. It is the biggest mental game learning how to trade, and it takes time. And you need to give yourself the grace to do so. And in order to do that, you need to really operate with well-versed risk management. You want to calculate and you want to understand, and you want to most importantly accept the risk versus the reward of every single fucking trade that you do. You don't get cocky. Don't start revenge trading. You don't start adding leverage or fucking wishing it go the right direction. Use math and use Thor, and that's all you have to do. How much are you willing to lose, or risk for each trade? And does that potential profit make that risk worth it? That's something that you'll have to really balance against yourself every time you take a trade. The more professional traders understand, and it's not an emotional decision, it's simply math. How much money do I have in my trading account? You know, let's say I have $1,000 in my trading account. Am I willing to risk 10% of it on a single trade? Well, some of us might say yes, and some of us might say no. And no one can make that decision for you. And that's where the complexity of learning how to trade really comes into play. So you do want to know exactly how much you're willing to lose or how much you're willing to risk. I would say that it's more important as you're doing perpetual trading and with leverage. That is a really easy way for you to become sort of emotionally involved in a trade. And you need to get the fuck over that. You need to get the fuck over yourself. You need to quit staring at the screen. And you need to just simply know what the numbers mean to you before you get into that trade. If you choose to apply leverage, let's even just say you apply a small amount of leverage, 5x. You have $1,000 in your account. How much money are you personally willing to lose on that? What amount of money do you need left over to make up for a loss? I generally will never have more than 40% of my trading portfolio in a trade. And that's exactly what you see Thor doing on our automated protocol as well. People sit there and wonder why they're still, 40 to 60% in just capital. Well, we want that capital because we come from a really risk averse trading strategy. If something goes wrong and we don't get the outcome that we want, we have more cash ready to go. We can add to a position, we can wait for the next Thor signal, or we can, sort of DCA back in and lower our exposure rating at that point. So risk management is the biggest thing for you to really begin understanding. Now, I suffer from this myself. I don't give a shit who you are unless your name is Sile. You all will have emotions play into your trading. And that is where the battle of trading really starts. We've given you guys a tool that is designed to take that emotion out of it. We've run the math for you. We've understood what the right entry and exit points are. And it is your responsibility to yourself to use them in confidence and understand how much you're willing to lose on a trade and that you can bounce back when you're ready to if a trade goes the wrong way. And so that risk management does take time, but for just a general, I think, sort of rule of thumb, aim to have about 30% of your portfolio actively trading, and the remainder of your portfolio is ready to deploy when you're ready to deploy it. And so that gives you an opportunity to recuperate from a bad trade or anything like that. Are there any questions on this screen?
Yo, what's up,
really
Andy?
bad. Hey, brother, how you doing?
Not bad, dude. No questions as of yet, but I definitely want to highlight as it's really using Thor, and I am proud to say and happy to say that every call that I've taken has. Oh, wait, hold on. My phone is. Can you guys still hear me?
Yeah.
Yeah, every call that I've taken has, been a hit. That's my seatbelt. And when it comes to risk management, it's said during these sessions very often, but until you're, getting the groove of things yourselves, as am I, will it really start to sink in? And, I've done everything that you don't want to do that we discussed that we've discussed that Mo really highlighted on last week and the week prior, revenge trading. Just to give you a quick example, I was in a some position, uh, willingly took a $22 loss thinking that I can re-enter, reposition myself, and 50x.
Oh yeah.
You know, and it, I, I don't control the market, obviously, and I have no foresight on what's going to happen because my TA is still, in development. But more importantly, I deviated, and I can honestly say this because I'm very tentative to, what I do, but I deviated from, Thor's original parameters and tried scaling on my own and ended up revenge trading, more than I would like to. So controlling your emotions is definitely uh, something that you gotta master, because I'm very temperamental naturally, and just being mindful. Uh, as Andy said, Thor is does the math for you. Um, and it wasn't until the second week, like the first week, I was making gains, following the parameters, not being hasty. And then I got greedy and thinking that I can fucking scale the walls and shit. But
Yeah, and that's a super common sort of phase everyone will go through. You know, if you start having a trade that goes the wrong way, and it really just goes back to the importance of risk management and taking the emotion out of it. When you start revenge trading, there's not really good that comes out of that. You're making,
absolutely not.
yeah, mathematically improper decisions. And at that point in time, you're doing yourself a disservice. When we talk about risk
Absolutely.
management, and I'm going to jump into some of these other things because it directly builds on what you're talking about. And thank you for that input, man. We all
Yeah,
know
no
that
doubt.
yeah, that's a very common thing when it comes to trading.
I would
So
also say, lastly, I wouldn't advise falling asleep like I did, just unintentionally, thinking I'm gonna stay up, and you get swept out of your position. So just be mindful of what you're doing, and Thor will take care of you. I promise.
that's damn right. Hey, Poison. I don't know why your server muted, Poison, but we're gonna get you back up. Poison's been doing some awesome graphics for us. So let's jump right back into it because he brought up a really great point. Is you're gonna wanna control the market. You're gonna want to think, oh, Thor fucked this one up. I'm gonna do something else. And then usually, I'd say 9 times out of 10, you get wrecked. Even you'll take the loss and then you'll go, making an improper math decision. So more into the degen terminology. We're gonna get into this here in a second. We're gonna start talking about it right now. We're gonna talk about time frames. If you guys are actively using Thor, you know that we give trades on 4 different time frames: 15 minutes, 1 hour, 4 hour, and then 1 day. It just represents the amount of time that it takes for a single candlestick to open and close. People are trading down to the 1 minute and 5 second candles sometimes. Hold on 1 second. Sorry. And so when we start talking about time frames, it's a way for you to get a general sense of either micro movements, intraday movements, or macro movements. The further that you scale out when you're looking at the time frames, the bigger depiction that it will give you, the bigger moves that it will give you. The pump to Solana was something we called 2 months ago, and that took time to get to, and it also happened really quickly. And so when you're looking at some of these Thor signals and you're just now learning how to use it, patience really does come into play when you start talking about the macro moves. When I'm starting to talk about macro timeframes, I'm referring to the 4 hour and the 1 day timeframes. We will be rolling out access on the 1 week timeframe, but we just haven't yet. So we will though. We want people who are really actively trading, and the 1 week can get boring as shit, but that's where the huge pumps come in. So when you're looking at a time frame, you're looking at a chart and you understand that this is the time that it opens and this is the time it closes. People will trade specific time frame candles, and that's really going to be about your own strategy and your preference on how you like to trade. I mentioned earlier, and we're really building, I'm giving you a depiction of how I think personally and why it is that I trade the way that I trade. I don't have time. I'm on phone calls all fucking day, and then I have some semblance of a life now, and I don't want to be staring at charts all the time. I don't care about the day-to-day micro movements. I don't give a shit about a 2% pump. I could give a fuck less. That to me is no movement. I give a shit about the 1 day time, the 4 hour time. Trades that I'll enter and I'm happy to sit alongside for a few days, up to a few weeks. I'm still spot long from months ago, and I'm happy. I don't care if we pump 5%. I'm happy when we pump 15%. I'm getting closer to my take profit levels. But that's one of the things to really start focusing on as you're learning how to trade. Is it stressful for you to be trying to day trade? For a lot of people, the answer is yes. You're trying to capitalize on smaller movements and smaller trading ranges that sometimes don't go the right way. Now, for the 1 day and 4 hour, patience really comes into play on those because they can take a long time to really hit those take profit levels or even hit the entry ranges. We were waiting for 6 months for Solana to hit $8. We had called it 6 months before FTX happened. I had such a fucking fat ass bag ready to deploy because I trusted Thor and that I knew that it was mathematically likely. And so I waited and waited and waited, and it took a big old black swan event to get down to that range, but I had my orders set and I packed my fucking bags, and I still am sitting on a large portion of that Solana that I bought back then. So when we start talking about time frames, it is up to you on how you choose to trade. 15-minute time frames and 1 hour time frames, definitely more for the day or a few days. 4 hour in 1 week or 4 hour in 1 day, those are definitely longer term trades. So if you're a newbie and you're just now learning, we've covered a few of my personal recommendations. It's to learn the ropes via spot trading, and it's to use some of the higher time frames, really practicing that level of patience that it needs to let those come to fruition. And like what Young had just said, there's going to be a lot of times when you're going to challenge yourself, and you're either going to see a negative balance or you're going to see that you're in profit. You're going to want to either close it for a loss or take a small pump, or you're in profit and then it goes to where you're not in profit or negative, and you're going to say, oh, fuck, I need to close it. Patience. Patience is the biggest part of the psychological game when it comes to trading. Patience and risk management are the two things that you as a trader need to learn. That is the two things that Thor cannot do for you. We cannot control your emotions, but we have given you every tool that you need to take it the fuck out of it. So the importance of time frames, like Mode has stated here, is pretty much what I just talked about. It affects the amount of time that you have to enter a trade and how long it may take for the trade to potentially hit take profit levels. So one of the things that we see pretty often is when we say somebody like, oh, hey, we're trading this on the 15-minute chart. It does not mean that it's going to take 15 minutes for you to hit and then take profit. It's simply analyzing those 15-minute individual candles, and we'll cover some of these in depth together. And it's using those candles to predict your trade. 15-minute candles and 1 hour candles, they'll generally be on smaller ranges. And so what we see a lot of is people will go in and to like further, let's say, capitalize on those trades, they'll apply leverage. Now, I'm going to tell you the first way to getting wrecked is trading 15-minute candles with high leverage. If you don't know what you're doing, don't fucking do it. Just saying that again. If you don't know what you're doing, don't fucking do it. You see people win.
I can
on the
vouch for that.
Yeah, just don't do it. Just sit and do that one thing that I've told you in this fucking conversation. Practice your patience. It sounds so stupid. This is not degen of us at all. And this is maybe a wildly different recommendation than Mode has. But you guys can tell whenever Mode's in here talking through his method of trading, I'll chime in and be like, hey, the inverse of that is don't do it. You'll find what works for you, and Thor will help you get there. So we've covered most of the terminology that I want to cover in how, trading 101. And I'm just going to take a quick break here. Let's cover one more. Trading journal. I recommend everyone have a trading journal and a trading log. It is the best way for you to keep record of your trades, and you can have something as simple as an Excel spreadsheet. There's also services, and there's a little old thing that you guys haven't fucking heard about that we'll release at some point in time, which will really help in this front too. So if you guys are actively trading, the more trades that you have running, simultaneously, the more important it is for you to know when you got into it, what take profit levels you're at, was your trade a success, and you need to take down that information and keep it in a trading journal. There's a ton of stuff out there already, but like I said, a simple Excel spreadsheet does the trick. Mr. Stop Loss is one of our most proficient traders, and he just has a simple Excel spreadsheet that if you go to the Can't Stop, Won't Stop channel, you see that he's classified each one of his trades as a win, as a break even, or as a loss. And if you look at his numbers, they're very impressive, but it's just a fucking Excel spreadsheet. You want to see a few things when you're looking at your trading journal. It's more about you. It's how did I do on this trade? Did I get impatient and close it for a loss? Well, did it hit take profit level eventually? Generally you'll see, yes, it did. More often than not, our trades do hit take profit levels. It can take some time, and you can go through some noise getting there. But this is a really good way for you to actually visualize some of the reason that we preach patience so much. You can write down notes of your own if you want to in the trading journal. You can say, I took this trade because Thor Pro said that it had a 30% delta in between take profit. And when I say delta, that's the percentage variation from the entry point to the take profit level. And so when I say it's got a 10% delta, that's really what we're expecting, is that there's a 10% difference in price action from the trade that we're recommending. So you're going to want to write some stuff down. And trading log, is really more about like the actual trades that you're taking. And the trading journal is more of like an in-depth, like, why did I take this trade? What's my entry? What's my exit? How long am I willing to wait for it? Is it a one day? Things like that. It helps, once again, take the emotion out of it. And you can look at your own, hopefully flushed out way of thinking and go from there. Your trading journal can be as simple as Thor recommended it. That's good enough for us. So that's all the terminology that I'm going to cover. We covered spot, we covered leverage, we covered perpetuals. It's a lot of information for the newbie traders. So I'll just stop and see if there's anybody that has any questions right now. And I really want to encourage y'all. This is the opportunity to ask questions. If you don't ask them, we won't know that you got them. Just going to scale through this right here. Cool. So that's the basics. Now I'm going to go into Thor. Oh. Now you guys should be familiar with what Thor looks like. Watch list, all that good stuff, Telegram notifications. I told you guys about the trading automation that we're going to be doing via Telegram. That'll be some cool shit. So now we're in Thor. We're at the bread and butter, a lot of the reason that y'all are here. And hold on a second. Started vaping again. It is so bad.
This is like riding into headlights, but I keep pushing forward. Does MS define me?
Pajamies, I got you on. I'm gonna mute you, bro. Just ping me if you want. Lena, we do have a trading journal template that we can post, but if you just do a quick Google search too, there'll be some good references there for you. So I'm going to navigate back to Thor. I'm going to assume at this point in time that I have no open trades, that I am completely out of the loop right now, and I'm going to tell y'all how I personally interpret Thor. I will give you guys some real world information that I have and let y'all, see how I think about things, because there's a few things that really start coming into play when you're looking at Thor. It's how are you positioned already? Do you hold any of this asset? Do you hold any Solana? Are you staking? What are you doing with it? You know what I mean? Or are you completely blank fucking slate? So let's just go ahead and start from there. Now, I personally really mainly trade 3 assets. And that's another big recommendation when it comes to trading 101, is to identify what it is that you're sentimentally bullish on. Bitcoin, Solana, Ethereum, things like that you know are going to stand the test of time. Those are assets that, are higher levels of confidence holding, which really plays into the spot trading strategy that I personally prefer. If Ethereum goes to 100, well, I'll fucking stake my Ethereum and I'll get some free Ethereum from it. Does it suck balls? Yeah, it sucks, but I'm still going to get some extra Ethereum. Same with Solana. If Solana goes back to $8, well, I bought it at $18, or whatever. I'll fucking just stake it, whatever. So I'm not a big 15-minute guy. Every once in a while, if I have some extra time, I might take a 15-minute call or so. But I always start by going to the highest level time frame that we have. And we covered what time frames are. You're not going to hit this trade in an hour, 4 hours, one day. Simply referring to each one of these individual candles that you're seeing represented on the screen being the time of open and the time of close. So I'm going to go here and I'm going to look at the 1 day. We're looking at Solana right now, which everyone has access to if you have a single cyber frog. And let's just see what we got. Long, we know what long means. You're either going to buy the asset at this price or you're going to open a perpetual contract at this price. Short, the same thing. You're either going to sell your asset that you have at this price or you're going to open up a perpetual short. That's one of the biggest things that I'd like to really highlight here. When we say short, now, yes, you can open a contract, a perpetual contract, and you can physically short that asset. What I use shorts for personally is some of my higher take profit levels on my spot bags. I just said I bought Solana at $8. Now I'm sitting here looking at a big old fat short that says we're going to get to like the $25 range. Well, that's a clean, 4x. That sounds pretty good to me. 3x, whatever it is, 3x. I might take some profits here. So when people see these shorts and you're looking at these higher time frames that we've said, a lot of the times what I see is people opening up a big old fat short at this level. You should be asking yourself, do I own any of this asset? What did I purchase it for? And is this a level that I'm happy taking profit at? For me personally, yes. I am going to be selling some of my $8 Solana or even $18 Solana at these prices. Now, you have a big risk aversion when you're talking about spot. Let's just say, for instance, that the price keeps pumping and we retest 32, which is what it's showing us on the 1 week chart. Now, am I going to be upset that I didn't wait for 32? No. No one ever gets poor from taking profit. If you profit off of a trade, you have done yourself well, you have done right by trading, and you have fucking won. You made money trading. You've beaten 90% of traders out there. Don't be afraid to take profit. So when I'm sitting here and I'm looking at these, these signals, short to me doesn't always mean open up a perpetual short. And we'll cover some of that here in a second, and I'll actually show you. This is saying, hey, sell some of your Solana at these prices, and then set your buy orders back at these levels. So that's exactly what I personally did. I have like a small bag of Solana that I'm going to be selling in these ranges, and I have my orders already set for these prices right here. And so it's a way for you to begin, accumulating assets, selling them on pumps, and then DCAing back in at these intervals. So we're starting to really build on some of that terminology. If I lose you guys, just let me know. But that is exactly what this is. So when I'm sitting here and I'm looking at Thor, people want to look at a singular trade. You want to look at this and you want to, bet a bunch of money on it. And I would say, don't. Take a small percentage of your Solana, sell it at these prices, and rebuy DCA back in at these prices. When you look at that in that light, a few things come to mind. There's a 15% difference in price or whatever it is. Don't make me math on the spot. I'll just embarrass myself. So if I say something dumb, just let me know. But let's just say, 12%, 15%. I'm going to sell 100 Solana at this price. I'm going to rebuy 35% of that capital at this price. I'm going to rebuy, 35 at this price, and then I'm going to rebuy the remaining 30% at this price. I'm ensuring that I get in. I've already made 12% more Solana than I had at the prices that I sold at, and I'm going to give myself the opportunity to make some more down here. I either have the capital that I made from profit, or I have more of that asset at a discount. And that's fine for me. We've talked about time frames really, giving you an expectation of how long it could take. And just look at us fucking dancing around that shit right now. It's so beautiful. That's some bullshit, right? That's what we call some bullshit. That's the technical term for your trading 101 terminology. That's some bullshit. And that shit happens. Prices do vary across exchanges. And so sometimes you can miss a trade by pennies, and it sucks, but there's always another trade. So, that's really how I look at Thor. When I'm looking at short, it doesn't necessarily mean open up a hedge or open up a short position. It can mean taking profit on my spot pack. I'm going to go over here and let's look at something that has a couple of different ones. And if you guys don't have this many assets, buy more. That's a good one. Render. Oh, that's Rune. Fuck Rune. All right. So this is a really great example right here. We've got signals on all 4 time frames. Now we're going to do what Andy does when I go and look at a trade. I'm going to start by looking down here. Don't really so much worry about the invalid right now. Just let it roll. Look at all those fucking juicy signals that we got. So I took this trade right here. I bought a bag of render at the 1.3 marker, and I was looking at that fucking take profit level, and I was really excited because that's like 40% right. I'm about 30% of the way there, and that has been really good for me. So you're going to see all of these, and it's going to be a little bit overwhelming sometimes. You can really get lost in the sauce pretty easily when there's a shit ton of signals. So how do we interpret that? Well, you're going to do one of 2 things. You're either going to be trading spot or you're going to be trading perpetual. Now, once again, my recommendation is pick the assets that you love, that you want to hold on to, and that you want more of. And you don't give a fuck if a trade goes the wrong way. I'm going to do one of 2 things. I have 50% of my capital left. Let's just say I love render for just fucking, the purposes of this conversation. I don't. I just wanted to make some fucking money. I think it's probably a shitcoin, but whatever. You have a couple of options here. Let's just say that you have absolutely 0 render to your name and you're looking at these signals for the first time like a lot of you guys are. We talked about risk management. We talked about not deploying all of your capital all at once and giving yourself some leeway if there's a better opportunity to purchase more assets at a lower price. You want to always maintain 30 to 40%, if not more, of your actual capital, USDC, for purchasing and or trading. Now, I'm going to look at these levels. I start by looking at my entry zones here, and really starting to scroll down, I see that there's a big fat ass range that we have. And that I'll do one of two things. Don't have to go all in on one trade. And these trades can be really indicative of a good DCA strategy. I'm going to dollar cost average in at this price, and at this price. I'm going to set aside however much, 10% of my capital, which is a lot for a single trade. Let's say like 5% of my capital. And I'm going to allocate that 5% on a staged entry because there's a huge range of signals here. Thor's telling us that it could go fucking up or down. What do I do? This is how you do it, is you do it all. I'm going to buy a little bit at this range. I'm going to buy a little bit at this range. And I'm going to buy a little bit at this range if we get there. Now, you can look at this right here. Your take profit levels do vary quite a bit. Now, what do you choose to do? That's a really difficult question to answer. A lot of it has to do with your own personal risk tolerances. And that's something that we use the Degenerate Shitcoin Trader channel to really help talk through. You can ask somebody, hey, should I enter right here? And they can say, well, the take profit delta isn't something that I personally would bite on. You know, that's only 12%. Meanwhile, down here, there's a 40% trading delta. Down here, there's even more. And so you can start balancing how you choose to DCA into an asset using the trading signals that are presented here. It can look overwhelming, but it's not really that fucking difficult. You can go up here and you can see our highlighted boxes that we have. And you can say, okay, well, shit. If we get down here, I'm going to purchase some and I'm going to save some of my capital because if we get down here, well, I want to buy a lot fucking more. And I'm going to have the capital ready to do so. By the same token, when you look at the shorts, we already mentioned that shorts don't always mean shorts. It's still a good opportunity for you to sell your spot bags at the short intervals. Yes, you can open up a short if you want to. You don't have to. You can simply take profit. Now, how do I really justify or really approximate how I want to go about this? Well, I've got two things going for me. I am personally in this trade right here. I see a big old short coming up right here. I think to myself, well, that take profit lines up with that short pretty much. That seems like a pretty good time for me to take some profit on my trade. Meanwhile, we have another signal right here. Well, that's pretty much take profit level 2, pretty much. So you can start looking at this and examining when it is the right time to buy and dollar cost average in, and when's the right time to sell and scale out. Now, this is on the 1 day. When you're on the 1 day, those take time, and that's when patience comes into play. Here's how I sort of take the next level, and I'm asking myself, well, what's more of the immediate price action that we're expecting? Well, I'm going to start scaling in on time frame. We've already seen that there's a large range on the 1 day, and that can fluctuate a lot. Now, while we're on the 4 hour, meaning that each one of these candles is a 4-hour representation of trading, this is the only signal that Thor's calling for. Well, if I want to take an intermediary sort of level trade, I can buy my render at 1.5 and I can expect to sell it right here. Or, adding to the complexity of some of this, I'm going to buy it at this 4-hour level. And what was it that it said on that 1 day? 1.9? Well, that's pretty fucking cool. All right. I'm going to buy right here and I'm going to sell it at the 1 day. So once again, you're not shorting, you're simply using the shorts as take profit indicators. Now, I personally would not do that on render just because it's not something I'm like really bullish on. I just wanted a big fat gain. So we've looked at maybe what the next week looks like. 4 hours is, I'd say, a good look at the next week to 2 week sort of price assumptions. We're going to scale in even further. Now we're on the 1 hour time frame. What does the next couple of days look like? What should we expect in the next couple of days? you're getting into where people will find that leverage does help, that some of the trading deltas are smaller deltas, and so that applying leverage can help you maximize the amount of money that you're making on the trade. But at the same time, the inherent risk is increased at that point. So what does this say? Well, we've got 1.6, 1.62, 1.5. Okay, there's the 4-hour signal right there on the 1 hour. So that means that that 4-hour signal is probably getting pretty close to entry. Okay, I might look at that. I don't know. Let's see how I feel. And then a short at 1.7. I don't give a fuck about this. I'm waiting for $2. And, you know, if I wanted to buy a little bit more render, then I'll buy a little bit more render. But I'm not really worried about that. That's not the profit. That's not the trade I'm in. Your trade, plan your trade and trade your plan. My plan has been to sell my render at $2, and that's what I'm fucking doing. Scaling in a little bit further, what's the next day or two look like? Well, that 1.7 is good, so there might be some resistance here. You know, I could take a little bit of profit right here and then buy down, but I don't really give a shit. That's not enough for me to really care about. I'd rather save it for $2. And same with this 1.6. I'm already in at the 1.23, so I'm good. Now, what does that mean? Like, what did I just do? This is literally how I personally look at Thor. I start here, and I look at the big moves. I took one big move right here, and I'm waiting for this and this for me to sell it. Everything else to me as Andy the trader is noise. I don't give a shit. I'm not going to waste my time. I don't care about small action. I want that 40% profit right here on that trade, and I'm going to get it. I think I covered a little bit about like DCAing in, and at the same point, you know, you're going to want to average out of a trade. You don't have to wait for Valhalla. You can take profit at TP1 and TP2. You can save a small bag and save it for TP3. You want to begin balancing your own trades in a method that really sets you up for success. And you don't go poor taking profit. Don't be a fucking moon boy, a moon girl. That shit holds no fucking place in trading, other than the idiots on your fucking Twitter time. You want to actualize gains, and you want to take risk-averse trades, which is why we're talking about spot trading and on the higher time frame. You may get bored as shit. It is boring. It is a boring ass way to trade. Takes time, takes patience, blah, blah, blah. Doesn't matter. If you're making money, you're outperforming 90% of the quote unquote traders out there. So, you know, that's a little bit of a breakdown on how to begin interpreting when there's a lot of signals being represented on Thor. What is it that you find is in your best interest? If you don't know, Degenerate Shitcoin Traders channel or Neo Tokyo Wastelands is a great place for you to ask those questions. So let's look at an asset that we have listed on Thor, and I'd love to get a recommendation from somebody. Lena, I'm going to put you on the spot if you're still in here.
I had a quick question.
Yo.
So I haven't actually traded with, well, maybe once, but I don't use spot. I've actually taken, I mean, I guess the riskier route with perpetuals. But my question is, when Thor makes a call and provides the entry range, because perpetuals is typically less than the actual spot asset, does the entry that Thor provides still apply to both if both perpetual and spot provide, or guess if they both have or fall within the range that Thor provides?
It's no different. You can buy them at spot, or you can open a perpetual contract. And look, you're getting my own trading bias in this conversation right here, and I'm really pushing for that just because that's what I personally know really well. If someone is really open to that risk of perpetuals contract, it is inherently more risky, then it's still the same. It's a good opportunity for you to open up a perpetual contract at those prices, or it's a good opportunity for you to buy those assets at those prices. All right, so Lena doesn't want to get put on the spot. So somebody else, what asset do you guys want to look at? Let's just do the same thing I just did for render on a different coin. And we'll talk through it one more time. Thor does get a little bit, not confusing, but maybe overwhelming when there's multiple signals active at once. And that's why I had said that those are really good, entry points for you to DCA in, or even when you're trading in a perpetual to maybe add to your position too. If you know what you're getting into going into it, that's what I would recommend. Captain, I saw you unmuted, brother. What asset you want to look at?
Oh, I was just going to say, I just started messing around with Drift literally yesterday, because I'm not supposed to be using it. I'm in the U.S. So, but I got on, and I just took a SUI, a long 1 hour SUI call. So I mean, we could always touch on that,
Talk
I guess.
another good shit coin.
Oh, it's definitely a shit coin.
Yeah, the more TPS than Solana. Go fuck yourself.
So I don't know. I kind of am trying to come up with my like, not just my trading strategy, but kind of like my crypto strategy. So, but I'm only I guess what I'm doing, I'm spot trading literally Bitcoin and Solana, and that's really all I hold, except for a little bit of ETH. But basically my bags are Bitcoin and Solana. So I've been trying to spot trade those, but I've just been using like a couple $100 little mini bag that I just threw in to trade, like do perpetuals on, stuff that I have no desire holding, right? At all. So just like almost like, I mean, is that something that is like decent to do? Just use a little bag to kind of I guess it's almost like gambling a little bit, I guess. But I mean, I'm literally doing is taking the Thor calls, uh, putting them in, putting my long or short in on Drift, setting my stop loss, setting my TP one, and going on my way. I'm not even looking. And so far, I've hit three, and I invalidated on, or hit my stop loss on two. But I'm up a little bit, so like, is that like, I mean, that's kind of the way to go, right? Not get any emotion in it at all. Just set it and forget it. And take what you get. Take what Thor gives you.
100%. And so when you're managing a small bag, that's when a lot of the times that we see people wanting to put a lot of leverage on stuff. And, until you get your risk management down, it is where that risk inherently comes from. That's not to say that it can't help, but a slow and steady level of profit outperforms riskier actions every single time. You only have to get wrecked on one trade where you've applied too much risk to it for your trading account to be fucked up. Meanwhile, if you're doing slow and steady, you're either spot longing, spot purchasing, or running a very mild amount of perpetuals, with leverage, that's where your risk aversion can come into play. And so I would say, yes, that's totally fine. What I really recommend, and you don't have to take my word for this, you can find your level of comfort, but I do suggest doing some research, with some of the other trading resources out there, is don't do a ton of leverage when you're learning how to do perpetuals. When you're managing a small bag, as long as you've done your risk management and you've determined the maximum amount of money that you're willing to lose on a trade, when you put that trade in, it will tell you straight up, like, this is how much you're going to lose if it hits your stop loss. So, dude, 3 profitable trades out of 5, that's not so bad. That's pretty damn good. And that's why
Nah,
we highlight risk
feel,
management.
Feels really good.
It demystifies it. You know what I mean? So, all right, I'm going to do one thing and then I'm going to switch accounts and I'm going to show y'all a little bit about drift. Also, I'm just going to fucking throw this out there. Yes, thank you. Solana is down something like 30% from when we opened, and our contract is up 11% in terms of US dollars. So we are currently outperforming the market by about 40%, and we've actualized some USD value fucking profit. I also have 20% more Solana than I started out with, so not fucking bad. So let's just say, all right, fuck render. Let's look at Sui. All right, so this is another good asset for us to look at. Now, when you get into some of the smaller cap coins, some of the maybe newer coins and stuff like that, Thor still does absolutely fantastic on it. You do just need to really be risk averse when dealing with these, in my personal opinion, because those are really easily manipulated coins. So we're going to do exactly what I did with Solana. We're going to start on the macro and we're going to go dial our way down. We're going to come down here and we're going to look at 3 signals that we currently have. Now, this is a really juicy entry price for 0.25 to 0.28. Cool. That's a 40%, 50%, 60% delta right there. I'm going to put $100 on that. And I'm going to open up a position and I'm going to have that order filled if it fills. And if it doesn't, I'll cancel it in the future. This is another really important thing that I didn't touch on, is the invalidation level. This will tell you when that is no longer mathematically probable to get to that point. So if we pump into some of these shorts, which is what you'll generally see, the invalid here is really around the first short entry right here. So if this goes the wrong way, that's no longer going to be an active call. That'll move over to the validated. So for Sui, I bought a bag around 0.44, and I'm going to tell you how I personally interpret it. 0.44. So let's just operate under that assumption that you've taken a long at some range down here, maybe a week or so ago. And now you're looking to either take profit or figure out what the fuck to do. I look at this and I say, these are 2 short signals. I can do one of 2 things like we talked about. I can choose these as my take profit levels for my spot bags that I already have. Or if I'm running perpetuals contract, I can close my contract and profit right here. Or I can open up a short. I see someone's unmuted. What do you got? Maybe I'm just hearing shit.
Oh, I'm sorry. I think it's me. I hit it by accident.
No, it's okay. I thought you had a great question. I was ready for it, bro.
Yeah, my question is, why do you sound different, Mode?
Mode is currently in the woods hiding somewhere. I don't know what he's doing. He's on like some camping journey. So y'all are lucky to, I'd say lucky, but y'all have risk of bores the shit out of me with his trading. To hit and take profit. I don't personally like to do that. I think like a month is really where I'm at. So, Mode will really give other recommendations, and that's why we've really presented Thor as a tool for you to use and establish your own trading strategy against. But all of us will push risk management. So, back to this fun. What are we looking at? We're looking at Sui. So I'm spot long personally around 44 cents. We see a couple of different shorts right here, and we're going to do what I had said beforehand. We're looking at the 1 day, so we know that those are some of the bigger move expectations in the market. And I am going to start selling some of my Sui at these prices. I'm going to set maybe 40% of what I have currently in my spot bag to sell at these prices, and I'm going to DCA back in at these prices. You can go ahead and set your sell limit right here, And then once that hits, you can set your buy orders at these levels right here. The same goes for this. Why did I only sell 40% at this point? One, I don't give a shit about SUI. I don't want to bag hold SUI. I don't give a fuck. I'm fine having no exposure to SUI at all. I'm just doing this because it had a good trade on it. So I'm going to sell 40% of my SUI here, and then I'm going to sell 50% of it at these prices. Now, I'm going to, once again, maybe DCA back in or, apply that capital that I gained to a different trade. Well, Andy, that doesn't add up to 100%. What are you doing with that other 10%? Maybe I sell that as my moon bag if things keep fucking pumping. So I will remain like a little bit of exposure. So this is what we know we're looking at in the next couple of weeks. I really hope that this happens. I put a big ass amount of money on this, and I will make a good amount of money if we get to those levels. I'll literally double my money if we get to these prices right here. But I'm having 70% more money. So we know what the 1 day looks like. We see the levels charted out right here. We know that we're going to set a buy order down there just in case. And we know that we're going to sell a percentage here, and we know we're going to sell a percentage here. If you're running perpetuals and you want to short the market, we know that we're going to open up a small short here, and we know that we may open up a bigger short up here. It's just a way for us to balance the possible price actions that we have. Hold on one second. Okay, so what does the next week or so look like? Okay, cool. Well, here's this. I like that. Sounds good. Took that trade right on. Fuck. Thor maybe recommends to buy a little bit more if it goes down here. I can DCA in and purchase a little bit more right here if I want to, or wait for that 20 cents. I personally would not do that. I don't feel the need to average in at those prices. And so I'm just going to ride it with this, and I'm happy with that. Now, you can look at the short. I can either take some profit here if I get tired of my exposure to SUI, and I'll have made, 20%, whatever that is, right on. Or I can open up a short. I probably wouldn't. I'm happy bag holding this for, a little bit while I get to those 1 day take profit levels. So zoom in even further. What's the next day or so look like? Okay, same recommendation. Good, took that one. I don't think I need to take any more of that, so who gives a fuck? And look, here you go. And this is where I'm really personally spot trading, and why. If you longed right here and you put a shit ton of leverage, you'd be wrecked right now. Now, I bought right here. I'm down 6% on this right now. I don't really give a shit. I'll wait it out because Thor's usually right. And I'm happy to wait for that 70 cent. On the 15 minutes, here we go. 15 minutes, it's calling for a slight price action, 4.6, whatever. This is where, the variations on how people use Thor really come into play. There's not a ton of delta in between these two. I could open a short. It's on a 15-minute time signal. I could do it. I would need to apply a pretty large amount of leverage or do a really large trade for me to get enough gains for me to give a shit. I'm really personally happy waiting for the 1 day signal. I bought right here on the 4 hour. I'm going to ignore these personally, though this is what the mathematical recommendation is. But I'm personally ignoring those, and I'm going to start looking at my shorts to figure out where my take profit levels are. 0.55, I might sell 5%. On the 1 day, 784, that's what I'm really looking at. And we go from there. So, questions. I know that we're getting into some of the territory where you're having to interpret Thor. And that is where some of the complexity comes into play, because you're asking yourself, well, what the fuck do I do? And I've given you some recommendations on what I would do. I would plan my trade, and I would trade my plan. I would trade assets that I'm fundamentally happy holding, regardless of price action. And I personally would use spot trading So if a trade goes the wrong way, I can still do whatever the fuck it is that I want to do with that asset. Stake it, provide liquidity, buy NFTs, whatever the fuck. Doesn't matter. I personally trade Bitcoin, Solana, and Ethereum mainly, and then I will take some shitcoin trades when the deltas are just too fucking ripe for me not to. Now, I'm going to get into some of the higher tier stuff. Actually, I'm going to shut up for a second and say questions, comments, concerns. I'm going to do one thing, and this is going to be one of the last things we talk about on Trader Tuesday, and then we will just open it up for questions. Once again, this is just meant to be 101. And I really wanted to focus on how do I interpret the Thor signals when there's a ton of signals. The biggest thing I want to stress here, and I've seen it time and time again, even from some of you in the audience right now, it's, hey, I opened up this short, and oh, it's getting wrecked. That's when you see Sile come in and generally say, it's a good time to take profit. And that's really the trading style that he and I both have, is the spot trading, macro moves. When it says short, it doesn't mean open up a fat ass short. It sometimes means take profit depending on how you're trading. Now, if you are strictly running perpetuals, I don't know if Xander's in here, but Xander is a really good trader from what I've seen. They know how to interpret this data, and they know when and how to open shorts and when to apply leverage. As you're learning the ropes, leverage is one thing, again, just to stray away from. So let's just go over here. I'm going to click that little tab right here. We're going to take ourselves to Thor Pro. I say that this is really more beneficial the higher tier access that you have, because there's just a ton of signals at this point that really can be overwhelming. So I'm going to do a few things. We already talked about my trading strategy, my trading style, and I'm going to go ahead and I'm going to take some of the noise and fluff and filler out. I'm going to deselect 15 minutes. I'm going to deselect 1 hour. 1% is not enough for me to make money. I'm a spot trader. I don't give a shit. 10% minimum. It's going to populate all of the signals that Thor recommends on my 4 hour in 1 day on any asset that I choose. And it's going to tell me what is a 10% more expectation of profit or not. Injective is good. I do have some injective. We just covered render. Look at that juicy fucking take profit level. That sounds great. We're going to go down. You can start seeing some of these, I don't want to call them shit coins, but definitely more in the shitcoin field, Matic and all that good stuff. All right, so that's way too much shit. I'm overwhelmed right now. I don't want to fuck with it. Well, I'm not going to trade Bonk right now. I'm not going to trade Doge. I'm not going to trade Dot, HBAR, Solana, Litecoin, Bitcoin, Matic, Near, Optimism, Rune, Sand. I like Sand. I like Sol. I like Sui. All right. And I'm spot on like most of these with mainly like looking through everything and showing me what the best trading deltas are, and it's given me just a one-off on this is what to take from your recommendations or your preferred assets and the expectation of trading delta that we have right here. I purchased this. I have an order set for this. That's a juicy trade. I'm into injective. Cool, right on, I'll take that trade. Y'all all know that I took the render trade. Currently dancing around 30% profit. Near, fuck it. Sui, pretty juicy right there. We'll maybe set a long order right there. And you can use this as a way to really look quickly at what the most profitable trades are. You can select the heat map right here. Gives you a really quick overview of what things are looking like. And now my ADD is really starting to kick in, and I'm wondering what I'm going to go trade. So Trader 101. Talked about some of the basic terminology, talked about some of the ways that you can manage your own risk. We talked about some of the ways that you can interpret Thor. And now the biggest thing that there is for you to go and try and use it yourself. We know what spot trading is like. You can trade on any centralized exchange that you prefer. Remember, not your keys, not your crypto. We do recommend DeFi and or actually holding all of your crypto off of a centralized exchange. Just for security reasons, not your keys, not your crypto. We know a little bit about perpetuals. We know that we're usually going to places like Drift. Show you that real quick.
Yeah, that is what I wanted to ask, if you could show or drift us.
Yep. Happy to do so. So here we are. You know, Drift has two options for trading. Oh, somebody else have a question? Nope. Okay. So
No, I was just saying, like, I'm gonna set up a trade, actually set it up, because I've been spending time like going through these videos and then just getting more acquainted with Thor. But then to actually like set up a trade, what do I do? So I'd really appreciate if you go over that.
totally. And thank you for bringing that up. So we're going to look at Drift because let's support the homies. You know, Drift is okay. When you start looking, how do I say this? When you start looking at where to trade, volume really comes into play. Drift is not the best solution when it comes to like massive amounts of liquidity. Solana DeFi sucks. There's not a ton of trading happening on Sol DeFi, but we're just going to use Drift as a recommendation. Or here, this is an Ethereum-based trading platform, which has absolutely fucking killer volume. We are rolling out our automated services to being able to take advantage of this soon. But just for ease of use, since I have an account set up over here, we will go ahead. You'll see how baller I am with my bonk. All right. So I have two wallets on this right here. This is just my non-ledger protected, and then this is my ledger protected. When you're interacting on a decentralized exchange, it will ask for wallet confirmation. If you don't mind having to approve those transactions on your ledger every single time, you can use your ledger. I will put a very small portion of my portfolio over on a hot wallet. I'll trade on that just because I get tired of having to fucking approve everything. But it is a risk because you've got ledger protected. So let's go and what do we want to trade, y'all? Let's. Oh, I can't get in. So we're going to trade Solana. Now, I won't be able to bounce around since I switched wallets, so we're just going to use this as a reference. Let's just say, for whatever time frame, this is the trade we want to take. Now, you have to ask yourselves two questions. Am I opening up a perpetual contract, or am I buying the actual asset? We're going to show you both. And I already have some of these set up. So I'm at Drift, and I am in perpetuals. We talked about perpetuals being just speculating on the price action. What we're going to do is that there's different order types over here. Market means that you're going to fire off your order and it will just execute on these pending orders over here. These are people physically buying or selling an asset. They are longing or shorting, and you are either selling from them or buying from them at these prices. Market means that you fire directly into this order book, and that's where things like slippage come in. Slippage is a term that we didn't cover in 101, but we'll just touch on it super quick. Slippage is just a price variation in the asset that's available versus what you purchase it for. The trading, where's the actual real life trading? Currently, Solana is this price right here, 23.54. If we wanted to go spot, we would have to buy at these prices or inverse at that price. And so slippage, when these are dead order books or really empty order books, you can start running into slippage because you're trying to execute a large order and there's not enough at the price that you want. You know, we're looking at pretty relatively small sizes here. 352 Solana, 3,000, 2,000. You know, you're getting into some more right there. So the bigger trade that you have, you know, it's recommended to go to a trading platform where there's a good amount of volume. Drift is not really that, but that's what we're going to use just for the reference. The same fundamentals apply both ways. So we're trading using Thor. We know when we want to buy shit. We know when we want to sell shit. We're going to go and we're going to select limit. Limit gives you the option of setting your order in advance of the price action getting to that entry zone. Limit, I'm going to physically set the price that I want to open up a contract. And let's just reference Thor. Thor says long at these prices. I'm going to say, okay, cool. I'm going to fucking set an order right here. So the limit price, 23,113 to 2307. This just gives you a small range. You can either be on the low end or the high end of it. That's really up to you. Sometimes they won't fill by a couple pennies. Sometimes they will. So I'm just going to say, I like to go on the high end personally. I don't really care about a small amount of variation. I might set 80% of my trade up at this price and then 20% at this price or anywhere in between, just in case it does dip below, then, you know, I could average in a little bit more. So 21 or 23.13. So I'm going to open up a limit order at 23.13. Now, you can either select on Drift the amount of Solana that you would like to purchase at that price, or the amount of USD that you would like to purchase at that price. I'm just going to check my balances right quick. I have like $1,300 in this little account. No big deal. I set this up yesterday for us to be able to walk through some of this, and we go from there. So I deposited some Solana and I had deposited some USD. So I'm going to go long. And we talked about, you know, some of the, what's the take profit on this? 23.77. So it's really not that big a trade. Well, let's just say, cool. I'm going to put, I've got $850 or whatever in this account.
And this is Drift Perpetuals, correct?
Correct. This is Drift Perpetuals. And we'll cover spot here in a second too.
Bet.
So cool. I'm going to open up this long. I've got $850. I'm going to do a $50 trade. No big deal. It'll tell you how much Solana that you're longing at that price. It will tell you leverage. Since I have the capital to cover that, I'm not really using any leverage. Now we're going to go down here and we're going to do two things. Take profit and stop loss orders. When you start getting into this leverage and all this, you know, you can fuck around and see what happens. Like, oh shit, I don't want to do that. It starts changing because you don't have the capital to cover $3,000, so it tells you how much leverage you need to buy. But I personally don't do that, so I'm just going to go $50. I can cover that trade. My take profit levels. So when you reach your take profit screen, it's asking you at what price do you want to take profit, or at what percentage profit do you want to take. This is a quick selection, 315. We're going to do what we do best, and we're going to use Thor. And I am a take profit level 1 maxi, and I'm going to put my take profit at 23.70. Okay, now stop loss. How do I calculate stop loss? What amount of money am I willing to lose on this trade? How much, you know, what do I want to lose? I really don't like losing more than 5% on a trade. You know, 10% if I'm feeling fucking ballsy. But since we're talking perpetuals here, remember, if the trade goes the wrong way, you've got nothing other than negative numbers looking at you. You only lose money if the trade goes the wrong way. On spot, I don't set stop loss. losses. I don't give a fuck. I'll go and do something else with it. But for this, we're just going to say I'm going to take a 50 or a 5% loss. It tells you at what price your stop loss is triggered, and it tells you how much. Now, this is when you can start looking at risk versus reward. Is this something that you start thinking is, advantageous for you as a trader? Maybe. Are you willing to risk 5% for a potential 2.75% gain? Maybe. Maybe that's you, maybe it's not. What would I do if it weren't me? Well, I'd say I'm wanting to take a 1-to-1 ratio. I'm only willing to lose as much as I'm willing to profit. So I'm going to set that at 2.75. My stop loss is triggered at this price now. My take profit is set at this price. I have a 1-to-1 risk versus reward. That is an okay place to be. I'm willing to lose as much money as I'm willing to make. Now, the inverse of that is definitely more from a trading portfolio. What is 5%? For me to get 5% profit, it has to get to 24. Does Thor say we're going to get to 24? Well, shit, it does. 24.16. You can see how your own strategy and risk tolerances start playing into it. Do you want to go for take profit level 1? Are you happy with just a 3% trade? Do you want that 5%? These are questions that I can't answer for you, but I can give you my recommendations is be happy with any profit. As you're learning how, especially, happy with those 3% gains. They really add up over time.
Hey, I've got a question for well, more so for spot, because with perpetuals, I noticed like there's a execution fee. Does that also, is there a fee applied to spot as well?
There is. Yeah, Coinbase is one of the worst ones. They have really expensive fees. And that is one that's a really great point that I didn't touch on. Is you're running these assumptions. One of the assumptions is that you have to pay for each of these trades. Now, we'll see all of that here in a second. So I'm putting $50 on the line. I'm either going to win $1 or I'm going to lose $1. Risk to reward ratio is 1, like we talked about. Yeah, cool. I'm going to set that. Now, this is when, that conversation gets brought up is what is the, what are the fees? What do those really play into? Let's see. So we've got this. We know what we're doing. We know how much SOL we're longing. We know the price. And we're now looking at a fee, 5 cents. It's going to cost us 5 cents for this trade. Now, that digs into a small profit margin. You're taking up a pretty good portion of that profit overall, but relatively speaking, not that much. So I'm okay with it personally. When you go to trade spot, it's generally a percentage of the trade that you're taking. The bigger the trade, the more fee that you have to pay. But the expectation is the more profit that you'll make overall. So I've set up my trade. I've looked at Thor. I've looked at my risk to reward calculator 1-to-1. I'm personally okay with that. And we're going to take this trade. It's going to ask me in my wallet. I'm going to confirm. And I placed 3 orders. I placed my buy limit. I set where I'm going to take the order at. I set my take profit order. And I set my stop limit. So that's why this says 3 orders right now. And now it'll show over here. So we see this. It's not been flagged. There's not entry, not exit. Nothing's happened. We're good to go. And that's how you take that trade. The inverse is spot trading. Once again, I said you can use leverage if you want to on trades for spot, but it doesn't really make sense if you're spot trading to me personally. So we opened up a contract. We're running perpetuals. That runs just based off price action. Now we're going to talk about spot, and we're going to actually buy some. 23,113. I don't really want to buy Solana at that price, but I will just for this purpose. I'm going to set once again a limit order. Set our range that Thor is saying. And I'm going to now input how much Solana I want to buy at those prices. We're just going to buy one Solana at 20. Buy Sol. Tells you how much you were going to buy. Tells you at what price. And it tells you how much that you're going to be paying for it. I'm going to be paying an additional 1 cent for that Solana. That's my total cost. I'm okay with that. Boom. Good to go. The other
So
side of
is that what the Thor auto contract basically does? Is continual spots?
it does for now, but we will be rolling out perpetuals in it as well. A little bit of alpha is that any trading portfolio that you get to really being like a well-versed trading portfolio has a variance in some of the risk. And so some of them will be mainly spot with a small percentage of it trading perpetuals. Hold on 1 second. 2 seconds, I gotta put my headphones on. Okay, I'm back. Sorry about that. All right. So, let's just go in for some orders that I know that I have right now. So I've got a couple shorts open right here, and I've got a couple longs open right here, saying when I'm willing to buy it, and I know when I'm willing to short it. Just for instance, this 24.9 range. So we're going to move back over to perpetuals, and we're going to open up a short. And I've already done this, so it'll just be small. The short range that we looked at on the 1 day was showing $24.09 or 90 cents all the way up to like $25.12. So you can see in my trades that I've already done a scale. I've opened up a small position, a small short at 24.9, and I've added to that position a little bit higher, and I've increased it so that I'll be doing that a little bit more. So to open a short, it's the same thing. We have a limit order. We're going to set our price, 25.1. And do I want to say how much Solana I want to short, or do I want to say how much money I want to short? For me, I'm just going to say how much money I'm going to short. Take profit levels, I believe was 21. Just say 22, just to be safe. Best price. So, and this is just me sort of flying off the cuff here, because it's generally what we were looking at. $22 is my take profit level. So when we go from 25 down to 22, I'll make 12%. If we get to 27, then I'll lose 7%. There's a 2-to-1 risk to reward calculator here for me. I'm happy with that. I'm going to add that, and I'm going to open up my short. You can go through and always confirm how much Solana, the price, the trading fee, all that good stuff. You're looking at your risk to reward. Boom. Now, you've only seen me do this without leverage. With Drift, I don't really like how their leverage is really portrayed. It's a difficult, sort of, sometimes complicated thing to do. You can find trading platforms that work for you. There are a couple non-KYC trading platforms that I think are okay. Any centralized exchange has risk attached to it. There's things like Bybit, which is KYC, meaning you have to actually dox to be able to use them. Then there's BingX and MEXC, which are centralized exchanges that you do not have to KYC for. We all know that those are really open for a short amount of time, and generally speaking, seem to be on the sketchier level overall. So, questions, comments, concerns.
Yeah, which decks would you recommend that doesn't require a KYC if you're in the US?
You have to have a VPN, but Didex.
Or
Yeah, so super quick on Didex. It is an Ethereum exchange, so you have to pay a fucking shit ton of fees once you get over there. But it settles
you mean like
all
per
of
trade or just like subscribing?
just getting over there. Yeah, you have to pay to move your Ethereum over there, and then you have to pay to deposit it, where you'll pay Ethereum trading fees, which suck like crazy.
Per trade, you mean?
No. So once
Oh,
you're actually depositing your funds on Didex, you settle the trades on layer 2, and so the trading fees are not that bad. We're used to Solana, and so you saw Drift. It took like a 5 cent.
yeah.
Trading spot. Some of the bigger centralized exchanges are really where I would recommend you trading spot, Bybit or Binance and Coinbase. Coinbase fees suck butt. They're really fucking expensive, but I do personally trust Coinbase. So, but if you're looking to start with this, Didex is a really great place for perpetuals trading. You can do leverage, and the trades are just a couple bucks per, so not that bad. 23, look at that. We're going to be, do we open it? All right, hey, look. So, look, while we were talking, one of our orders filled. I am now in an active trade on that 15-minute signal that we had from Solana. I'm showing negative. No big fucking deal. Who gives a shit? That's what we did that for, Here, I'll show positive here in a second, whatever. The trade will actively show you your profit and loss if you're trading perpetuals, unlike spot, where, it's generally not real-time data. They'll update it ever so often about how much you've made, either on the daily or whatever. But perpetuals really do give you that dopamine hit, which I would really caution just being aware of. When you start seeing profit, don't pull out of your trades too soon. If you start seeing negative, plan your trade and trade your plan. You know how much you're willing to lose, and now we're going it. So we're actively in a trade. We'll see if we make 3% or whatever. Drift is really good if you're just trading Solana. I wouldn't recommend it for anything else, basically, on spot, but they do have decent volume on some other perpetuals.
Yeah, that was gonna be my question. Is if you're just trading Sol, and like what's the best, and then if you'd recommend anything, I guess Drift seems to be a pretty common one. But what's the cons there, in your opinion?
Just shitty trading volume. Drift is doing $1 million a day. Okay, that's not so bad. Let's just look it up real quick. So Drift is doing $9 million of trading volume a day. Didex is doing almost 800 million a day. Pretty crazy. Thor chain is an interesting place to trade on. We can cover that later. But you can just go to CoinMarketCap and see where most of the trading volume is taking share.
You think the spot ETFs are impacting that?
They'll have to trade on centralized exchanges.
Yeah, because I know that's starting to gain traction. I've been listening to the news on that. Just curious on your thoughts there.
So you will see it like on spot trading. Binance is king, and it has been for a really long time. Their trading volume is $5 billion. That's insane. Obviously, next one is going to be around $1 billion with Coinbase, Kraken, KuCoin running all the way down. Bybit's good people. It does suck that they KYC'd right now, but that's where you're going to see the ETFs really having their trading volume is on the centralized exchanges. For crypto maxis, we think that decentralized exchanges are better for the holder as a whole, given that it has got the security of the blockchain, and no one can come into your DEX and take your fucking money. They 100% can come in. I have personally had my funds seized on centralized exchanges, and there's nothing that you can do about it. Piss off somebody, or you get under investigation for tax evasion, or whatever it is, they can physically take your money from centralized exchanges. They cannot take them from DEX. So, what I hope that today accomplished is a way for you to understand how to interpret Thor. You know my recommendations on where to begin trading. And the biggest thing that I'd like to leave this with is that this isn't the end of this learning journey. The next phase of this is asking questions. And you can do that right here and now, and I'm happy to walk through them to the best of my ability, or utilize one of the biggest strengths that we have, and that's our community. When you ask a question, you will, get used to hearing 5 different versions of answers. Everyone has their own strategy. Everyone knows what works for them. That may or may not work for you. If you ask me or Sile, you'll definitely hear more risk-averse recommendations. If you talk to people, I don't want to throw anybody under the bus. Charge, are you in here? Charge is not in here. Charge is in here. If you ask Charge has been trading for a long time. He understands what his risk tolerances are really well. He might have a different recommendation. He might say, leverage the fuck out of this trade. You need to find what works for you. And if you're learning, don't use leverage. If you're learning, test the waters on $50. Test a $50 account. Find out what works. Find out what doesn't. Find out if you have the patience to take those macro calls, or find out if you don't. If you don't, let us do the work for you and use the automated protocol. If I can do this, if Caveman, is Cave in here? No, he's not. If Cave can learn how to do this and use Thor, you 100% can too. You don't need to stress yourself trying to figure it all out all at once. You need to just have a very small account, test it with $50, get comfortable setting your stop losses, get comfortable setting your take profit levels, really allow yourself to grow with your account. At a point in time, you might get to where you're managing $20,000 or more. My personal accounts, I can tell you that the more money I have in an account, the more risk averse I am. That is one of the hardest things. More money can definitely mean more stress. If I've got a $5,000 trade open, bet your ass I am taking very risk averse positions, and I'm personally spot trading with that amount of capital. That's something that you'll learn over time. So we're getting close to wrapping up. I want to just one more round of questions if anyone has anything that they want to ask. And I'm happy to walk through more trades or whatever.
No questions from me, but I want to thank you, Andy, for taking the totem and giving us that golden light and showing us the way.
Thor, I am but a simple messenger.
No doubt. But what I definitely took a lot away from your perspective on trading. I'm saying this now while in a 10x leverage. I'll learn my lesson, don't worry. But again though, thank you, and everyone else have a great night, and frogs fuck, dude.
We appreciate you, brother. Frogs do fuck. Questions, comments, concerns, anything that's feeling unclear. I want you guys to use these this time to really just fucking ask anything. What can I do to help?
you can drop some alpha on the auto ordinal contract, BTC.
That is definitely alpha. So it's done. Let me just throw that out there. It's done. It was done before we launched Ordinals. We've had it completed. It lives on Solana, and we can't do it on Solana because there's only 90 Bitcoin on Solana, and it's dog shit. We can't trade that. We're going to literally fire into our own orders. Some of the advancements that you're seeing coming out to the actual protocol that we have on Solana is directly correlated to the need for that to be able to execute those trades and orders on the Bitcoin. So we will be applying it to Binance specifically. When we do our Solana Bitcoin base pairing, we will be executing those trades on BNB and potentially running perpetuals on Ethereum on the DIDEX that I just showed you guys. So it's done. It's been done. We thought that Solana would have a little bit more Bitcoin volume than it does. It does not. So we're going to pivot for you guys, and we're going to make that live once we get the protocol ported over to the additional chain. So I hate being the bearer of bad news.
Oh, yeah.
Y'all really know that I try not to do that shit and like set up wrong expectations, but we just can't trade when there's only 90 fucking Bitcoin trading.
No, but that's what I love about the team. You all seem to, you see walls and then you find a way around them, through them, over them, whatever it is. But it's not the end of a plan when a plan falls through. So appreciate you guys. Yeah, hell yeah.
Not a problem. It's so bad when we have to rely on anyone outside of the Frog team for anything. My expectations are a little bit daunting, you know. But we will continue to find the best solution, and that is where my goal is for the trading protocol. I will drop a little bit of alpha on the automated protocol. A lot about what we're talking about here, you know, those are really our trading strategies implemented into a smart contract. We will be expanding that to include a very small percentage of the capital being managed with a little bit higher risk tolerances, to where we can make some additional moves while some of the macro stuff is taking a long time. We're really only doing 4-hour and 1-day signals with the automated protocol. We will roll out very small trades in 15 minutes and 1 hours. And as we expand to other blockchains and we allow for that to be running simultaneously, we will also be opening up shorts, perpetuals, and adding leverage to some of those, I think, higher risk tolerance portions of the trading account. We will not wreck anybody. You know, that's our main goal. When Solana was down 70%, our trading protocol was down 20%. It looked like shit on paper. Meanwhile, you had 50% more capital than you would have had otherwise. Right now, as the price is going up, we're taking advantage of all of that DCAing that we did at those small, lower prices. And we're currently outperforming the market by like 37%. So when you boil it down, it's operating beautifully. We do have automated liquidity coming into the automated protocol. You will be providing liquidity on the Solana assets like IMSOL versus GTOSOL, getting some yield on that, and then also getting some yield on USDT and USDC pairings. So you guys have seen like version 1.12 of the contract. We're getting ready to release like version 2.0. And that'll be really interesting to see what happens.
Y'all are killing it, Andy, and I'm still surprised how little, not relatively little attention that this project gets. But yeah, kudos to everything this team does.
We appreciate it, bro. And more importantly, we build up one dedicated member at a time, and that is literally finding. We love that. You know, I would take one dedicated member over 100 people just looking for a quick flip. So our community is strong. We're really happy with that. And as we expand our protocol to other blockchains, that vision that I'd had for cyberfrogs really starts coming to fruition, where there's a demand for cyberfrogs on multiple chains. And that's one of the things that we'll facilitate as well. Yeah. The future is bright. And let's just say that there's a lot of cool shit coming at the end of this year that we're currently working on. This last quarter is going to be pretty fucking fun. All right. Anything else? Questions, comments, concerns. If you want me to open up another trade, I'm happy to do so. If you want me to go through and re-examine how I interpret Thor, I'm happy to do that. Speak now or forever hold your peace. Because I got a big old sandwich waiting for me. I'm hungry. All right. If you guys have questions that come up in the future, if you're trying to see how to interpret Thor calls, just ask in the community. Ask in Degen shitcoin traders if you have access to it. If not, ask in Neo Tokyo Wastelands, and we're happy to give you guys our recommendations on it as well. If there's nothing else, I'll leave y'all with a frog's fuck, and I really appreciate y'all coming. And start small. $50. Start with $50 and see what Thor can do for you. I see Captain left, but I'll be interested to see what his $100 account does in 6 months. That doesn't sound like a lot. It definitely is not like 50x, 400% every trade. It only takes one of those trades to absolutely destroy your portfolio. See a couple of people typing. We appreciate you. Axe and Abby, we appreciate you both. All right, y'all. That's going to conclude Trading 101, Interpreting Thor, how to long, how to short, what the fuck am I looking at? The biggest thing, ask questions. Don't be afraid to lean on the community. We are here for it. So if that's it, I'll say frogs fuck, and I will see you guys next week.
Frogs fuck.
I'll never get used to that.
Frogs fuck.